Hello, guys. Welcome to the live stream. So, I have a day job, so I have to hustle. Trying to manage between job and trading. So, what I see is we already took out London's low, and the next liquidity would be this Asian session low. This box, Asian session liquidity low. So, this is the first presentation. We already rejected from the first presentation, but the rejection has to be done with some kind of fair value gap. This is pure consolidation after rejection. So I want to see some kind of momentum candle. So we can come back and take this swing high and this swing high and then go short. Before taking out this Asian session low. Like I said, this is consolidation, guys. We need expansion after rejection. So we might come back up and take this swing high and this swing high. So just I'm taking a small scalp into this swing high. It's just a small scalp, guys. If I'm wrong, I'm ready to take my stop loss here below midpoint of this order block. But this consolidation is what I feel like we might go up and take the swing hand and come back. But we have a bearish fair value up here. But so far we don't have any strong rejection from this bearish fair value here. But that is the reason I went long here. So now we are in 950 macro, 950 to 1010 macro. So we might see some kind of manipulation before the expansion. So I took a stop loss. So we had rejection from this bearish fair value gap. almost about to take this Asian session low. We are just very near to the low of this Asian session. So we took out this Asian low. So we took out this Asian low. So I took a small long into this fair value gap. So we created equal highs here. Equal highs. I want the price come into this bearish fair value gap before breaking down for that. So took one more stop loss. Still price closes above these down close candles, above this midpoint. Still try to go long. So like I said, when price tries to close above these down close candles, I'll still take my long. That's it, guys. That's a small scalp. This is our next liquidity target in case price wants to come down here. This is yesterday's PM session low. So after this huge expansion, the price is now consolidating here. Took one more loss. The reason I went long was this 5 minute candle never closed below this new day opening gap. These wicks went below the new day opening gap but never closed below this. So that was the reason I was trying to go long. But we have this huge balanced price range here, this huge wick which has offered both buy side and sell side, and which is engulfed by this down close candle. So I think this is a balanced price range. So price should not go above 50% of this balanced price range. So once we close below 50% of this wick with the body, we can again go short. So, but we need to leave this new day opening up with energy. This is simply consolidating here. We need price to show that it wants to move away from this. So I don't see anything to the upside, guys. This would be my next target. This is yesterday's PM session low. Put it here. 15th, right? 15th September. PM session. PM. The next liquidity target. So we want price to expand from this new day opening up. Expand away from this new day opening up with huge candle, and we need to close below this swing low or close below midpoint of this wick with the body. Right now price is just consolidating here. But there is nothing much to the upside, guys. This volume balance here. This new day opening gap is still unfilled. It's still remaining as unfilled. RTH gap, sorry. RTH gaps. So now we are inside this bearish fair value gap. So we have closed above the 50% of this 1 minute fair value gap. If price closes above this 1 minute fair value gap with the body, we can target this swing high and this first presentation fair value gap. So I'm just going. So it was my mistake. Price did 1 minute bearish fair value gap. So now again we have rejection of the midpoint of this new day opening gap. If again price closes above this down close candle, then I will go long into the swing high. It seems we are having a rejection from this bearish fair value gap. We are still inside this new day opening gap. We need to reject or move away from this new day opening gap with energy, guys. We need some kind of fair value gap to form either to the upside or downside, doesn't matter. But my target is to the downside. I was hasty in going long here. I should have seen this candle. It did not close above this bearish fair value gap. So now this candle is closing below this new day opening gap. So I added two shots. My stop loss being above this candle, and my TP being session low somewhere here. So I just reversed my trade because this candle is just nothing but a wick. It took out the swing low and again we are reversing. So that is the reason I reversed my trade. Clearly see the bodies never closed below this new day opening gap. Only wicks went below them. If price closes again above this candle, I will add one more lot and my TP would be so we are still inside this bearish fair value gap, but we have taken this swing low and the bodies never closed below this new day opening gap. So that was the reason I went long again. So my anticipation is price should come and take out the swing high and back into this first presentation fair value gap. So once price closes above this series of down close candles, I will add here one more buy. Just add here one more buy. Here. So in case if we close above this series of down close candles, I'll be adding one more lot to the buy side. So my target will be still the same into the first presentation fair value gap. So my buy stop is triggered. So one more lot is added to the trade. So once we close above this bearish fair value gap, I will adjust my stop loss. I'll adjust my stop loss. Right from the beginning, this is what I was anticipating. Like when we went up, I wanted to see price go back into the first presentation fair value gap. I was little bit early. I did not see this candle. It should have closed above this bearish fair value gap. Then I should have gone long, but it never closed. It closed inside this bearish fair value gap, and it came down and it took out the swing low. And then we had this rejection. The body is closing inside this new day opening gap on a 5-minute chart and 15-minute chart. So we have 15 more seconds for this 1-minute candle closure. If it closes above this 1-minute bearish fair value gap, we okay. So we have this 1-minute bullish fair value gap. Have this swing high, and this swing high. So if the price wants to go down, I want these swing highs to be taken so that the smart money will add their short positions to the sell stops and then break down. So I want this to close above this 1-minute bearish fair value gap. So again, price came down into this midpoint of this new day opening gap. It took out this swing low and this swing low, so it absorbed more sell side liquidity, and now we are seeing expansion. Now I want this candle to close above this 1-minute bearish fair value gap so that this will act as an inversion fair value gap, and then we can target our buy side liquidity. So I'm adding one more lot here, but I want this candle to close above this bearish fair value gap. Then I will add one more lot. So maybe I'll put one buy position here. Oh, yeah. So when we close above this candle, this down close candle and this bearish fair value gap, I will add one more lot and my target will be same. Once this candle closes above this wick, I will adjust my stop loss to below 50% of this wick. So now we are inside this breaker, this series of up close candle, this candle, up close candle, and this manipulation, and then this expansion. So we are inside this breaker. So we are accumulating more buy orders. And you can see this candle is above this midpoint. So my one more buy order is triggered. So once we close above this swing high, I will adjust my stop loss below midpoint of this wick. I want this candle to close above this swing high, guys. So we have 5 more seconds for the candle closure. So the previous candle did not give us this closure above this swing high. So let's wait for the current candle. So the reason why I went long is once this candle took out this swing lows, once this series of candles took out this swing low and we had an expansion on a 5-minute chart and 15-minute chart, we can see the candles never closed below new day opening gap. They were all above the midpoint of the new day opening gap. That was the reason I went long. And once we crossed above this midpoint, I added one more. Once we crossed above this series of down close candles, this acted as a bullish order block. So that was the reason I added one more here. So once this candle closed above this down close candle outside this bullish fair value gap, I added one more lot. So now that we have closed above this swing high, I will adjust my stop loss to below 50% of this wick. Yeah, somewhere here. So we have this 1-minute bullish fair value gap here. And with this propulsion order block. So we want to see price to come, should never come below 50% of this order block, this propulsion block. This is the order block which took out the liquidity, and this is the propulsion block. So we want price to remain above 50% of this propulsion block. So price is again at this midpoint of this bearish fair value gap, this balanced price range. So we want price to remain above 50% of this balanced price range. It should never come below this 50%, to the lower half of the 50% of the balanced price range. We are having very deep retracements, guys. This deep retracement, again, this deep retracement, because we are trading against the order flow. The order flow is bearish, whereas we are trying to go longs, trying to target this bearish fair value gap into first presentation fair value gap. So that is the reason we are having all these deep retracements. So took another stop loss because we are trading against the order flow. The order flow is bearish and we are trying to go for longs. So we are still rejecting from this top of this new day opening gap. If price closes below midpoint of this new day opening gap, I'll try to look for short positions. Price closes above this midpoint, again I'll look for longs. If price closes below midpoint of this new day opening gap with the body, I'll look for shorts. So far we are still so we have the next 15-minute candle is going to open up 10:30 p.m. So we'll wait and see what this candle is going to do. If this candle closes below this new day opening gap, then I'll look for shorts. Till now, on a 5-minute chart and 15-minute chart, the candles never closed below new day opening gap or even midpoint of this new day opening gap. So we are still in this consolidation, guys. So price again closed below this bearish fair value gap, but we did not have any expansion after this closure because that gives us the confirmation. But price just closed below this bearish fair value gap, but it did not give us any kind of expansion. But on a 15-minute chart and 5-minute chart, you can still see the candles never closed below midpoint of this new day opening gap. The volatility is very less, guys. Very low volatility. We are still in this consolidation, no expansion. The next 5-minute candle still did not give us any kind of information. It's just consolidating. So it did not take any kind of liquidity. It's just consolidating inside this candle. So I just went 2 lots long. I'm still hoping price will get into this first presentation fair value gap before going south. Because we want buy side liquidity to be taken before going down. So that is the reason I went going long. Because we can see the bodies on the 5-minute chart and 15-minute chart, body is never closed below midpoint of the new day opening gap. So that is the reason I went long again. So once we close above 50% of this bearish fair value gap with the body, I will add one more lot. So we want a closure above midpoint of this bearish fair value gap. So I added 2 more lots here. The reason being the same, we are bearish on an intraday basis. So I'll put my TP somewhere. So now we are above midpoint of this bearish fair value gap. So we are inside this volume balance. So I'm adding one more lot here once we cross this series of down close candles. I'm adding one more lot. One more stop loss again. Sell is again this thing. So price again failed to close above this bearish fair value gap and we had a huge rejection with momentum. So that is the reason I went short. So you can see now we have closure with momentum below this new day opening gap. So I want to see price remain below 50% of this new day opening gap. I don't want to see price to go above 50% of this new day opening gap. So we want to see bodies to close below 50% of this new day opening gap. So we have 10 more seconds for the closure of this 1 minute candle. We want to see this candle to remain below new day opening gap. So this candle closed below new day opening gap. Now we want to see the further candles give us expansion to the downside. So we want to see these candles remain below 50% of this new day opening gap. We might get into this bearish fair value gap, and I want a strong rejection from here. Now the problem with the shorts is this 5 minute candle never closed below this new day opening gap. At the same time, this 15 minute candles still did not close below this new day opening gap. So that is the problem, guys. We want this candle to close below this new day opening gap. We want this 15-minute candle and this 5-minute candle to close below this new day opening gap, or else again it will be problematic for shorts. But we had a huge rejection from this zone, but we are not getting any follow through. So we had a closure, this 5-minute candle closed below new day opening gap, which is a good sign. Even this 15-minute closed below this new day opening gap. So far this is a good sign. But we want a follow through, guys. Just closing below is not enough. We want this kind of momentum candle. So the liquidity above this swing high and swing high is very small. We are approaching 1050 macro hour. So we might expect price to come and take out this liquidity before going down. Sell side, there is no imbalance, guys. The only liquidity on the sell side is this swing low. This swing low, this swing low, and yeah, that's it. So there is no imbalance on the sell side. So we might come for this swing highs into this bearish fair value gap. But once we took out this liquidity, I want a strong rejection. I think we made again equal highs, equal highs. We want the swing high to be taken out. Did we take out? No, still equal highs. I said we might still go for all this liquidity on the buy side before going down. So I might have to reverse my trade if that is the case. But I want to see a strong rejection from here. If there is no rejection, then I might have to kill my trade. So I just reversed my trade because I did not see any strong rejection. And we never crossed below midpoint of this candle with the body, either on the 15-minute chart or a 5-minute chart. So price came into this 1 minute bullish fair value gap, and we had a reaction. Entire thing is stupid price action, guys. Nothing is going on here. Just back and forth, back and forth. Technicals are not going to save you here. We did not get any immediate rejection from this bearish fair value gap. So that is the reason I went long, because before going south, price might want to visit all this buy side liquidity before going down. Biggest weakness is trading consolidation, guys. I flip my bias so many times to the buy side and sell side. So, like, consolidations are my kryptonite. They literally kill me. Just wanted to add 3 more lots to make it 10, but it is already set to 2, so it added 16, 6 more lots. Oh, bad. So we are still inside this huge bearish fair value gap, but the only reason I'm still looking for longs is I want this buy side liquidity to be taken before going to the sell side liquidity. And price did not give any kind of expansion to the sell side, so that is the reason, like, price is continuously wicking here in this new day opening gap. So that is the reason I'm anticipating that we might revisit this buy side liquidity and this fair value gap before going down. Like I said, we have this expansion now. We want this candle to close above this midpoint, this bearish fair value gap midpoint with the body. So I will take my partials, guys, on the way to the buy side. So this would be 3, and this would be sell, right? Buy side, yeah, sell. This is 3, 6, and this is 3, 9. Next, this would be 12. This would be 12 and one more. 13, right? Altogether, one more would be here. This would be only one lot. One lot. Confirm. Okay. Just a waiting game. Either it will take my stop loss or go to my profits. Take profits. We had again a rejection from midpoint of this bearish fair value gap, so which is not looking good for longs. So this is the last line in the sand, guys. This volume imbalance is the last line in the sand. If we close below this volume imbalance, our trade is over. The reason I went long is we never closed below this 50% of this wick with the body. Same thing on 5-minute chart and 15-minute chart. And there is ton of liquidity on the buy side. So we are inside this 5-minute volume balance. That is the last thing. So we have 2 more minutes for the 11 o'clock hour. It's like almost we are entering into the lunch hour protocol. So in the lunch hour, we might the lunch hour trade plan is to target the first swing high formed after 10 a.m. So after 10 a.m., this is the first swing high. So if we target this swing high, then we have all this nearby swing highs too. So that is the reason this could be the target before going down in the lunch hour. So we have a reaction from this volume balance on a 5-minute chart. So price is rejecting from this volume balance on a 5-minute chart. And we want to see price close above this midpoint of this 1-minute bearish fair value gap. We want a closure with the body above this midpoint, guys. So 40 more seconds for the 11 o'clock hour. We might see some spooling or manipulation. But my anticipation is 11 o'clock is the lunch hour macro, and I want price to take out the swing high before going to take out this swing low. What I'm anticipating. So again, took a stop loss. So now we can see this 15-minute chart. This body is never closed above this new day opening gap. So our target would be this session low, guys. Yesterday's PM session low. So this is our confirmation to go for short. The 15-minute chart, the body is never closed above this new day opening gap. So this entire week was only manipulation. When this candle closed below this candle, I went short again. So this is my next target. This is yesterday's PM session low. So I want for this candle to remain heavy, guys. We need, this is what, like, we want huge momentum now. So we had a very good closure with this 5 minute candle, very energetic closure. So now this is the bearish order block. This series of up close candles and this expansion. So this entire thing is balanced price range. So we don't want to see price to go beyond this wick. Beyond this wick. I don't want price to close or go beyond this wick. On a 15-minute chart, this is not looking good, guys. It is looking like we might, the 7 o'clock, this is the manipulation, and this could be the move and again into this bearish fair value gap. I'm not sure now. This bearish fair value gap is my last line of sand. I don't want price to close above this bearish fair value gap. So we want to see price to remain heavy from here, or else again we might go and target this buy side liquidity. But I want to see price to remain heavy inside this bearish fair value gap. So we want to see price remain heavy from here, guys. We want price to remain heavy from here. Like this entire thing is balanced price range now. So we want price to remain heavy from here. If we are closing above this 1 minute bearish fair value gap, then we might go for all this buy side liquidity. How to chat? Okay, okay. How do I reply to him? So I'm reversing my position, guys. I'm reversing my position. So we have a rejection again from midpoint of this new week opening up. So we have a rejection from this 5-minute volume imbalance. So now we need to close below this swing low so that we'll have a breaker. This down close candle, this series of two up close candles is the manipulation, and this will be the expansion. So I want this candle to close below this swing low. Below this swing low. So my target is still yesterday's PM session low, guys. I want this candle to close this swing low with the body. Again, this is not looking good for shorts. We want this candle to close with the body below the swing low. So this is still not looking good, guys. We need a closure below the swing low with the body. So again, if we are going up again, we may target all this buy side liquidity. This is lunch protocol, lunch macro. This would be the target if that is the case. So we want to close below the swing low, guys. This is again not looking good for shorts. We might reverse. So we want to remain below the swing low, guys, with the body. We need to close below the swing low with the body. So I added 5 more lots. Once we, I want a closure below the swing low with the body. Yeah. We want a closure, guys, with the body, guys. With the body, not Wix. I'm tired of this Wix. I need momentum. I need more energy. So this would be our target, guys. Yesterday's PM session low, marked here with the red line. So now we want the price to remain heavy from here. On a 15-minute chart, we want the price to close below 50% of this wick with the body. We still did not have a closure below this swing low, with the body, guys. This is not looking good again. So I will reverse my trade. My target would be this 10 a.m. swing high. This lunch macro protocol. So this would be my TP. I'm adding 5 more lots here. And my stop loss would be just below the swing low. I was anticipating this, guys. I was anticipating price to take out this buy side liquidity before going to this, before targeting the sell side liquidity, but it never gave me. So once we close above this down close candle, this swing high, I added 5 more lots. So now I'll be taking partials. Buy, sell, right? Sell, yeah. This would be 5. Again, 5 more here. Sell, 5. And 5. Sell, 5. and 15 is done here, and another 5 here. This is 20 and another 5 here. Sell 25 and another 5 here. 30, 35. If it reaches midpoint of this thing, then another 5. 3, 3, 6, 7, 8. 8, 5, the 40. Okay. So I was anticipating this price will go and take this buy side liquidity before going sell side liquidity. But my mistake was I was looking for this trade before 11 a.m. The actual protocol will start after 11 a.m. This lunch macro will start after 11 a.m. So this is the lunch macro, guys. So whenever we have a huge expansion like this, after 11 a.m., the price will target the first swing high formed after 10 a.m. So after 10 a.m., the first swing high is this. This is the lunch macro. So this is the worst price action. Back and forth price action. I'm not sure if I go short again it will reverse. Worst price action, guys. Technicals will definitely fail you in this price action. So we have rejected again from this new day opening gap. Lunch macro protocol is after 11 a.m. price will target the first swing high formed after 10 a.m. This is the first swing high formed after 10 a.m. So this is the 10 a.m. hour. So the first swing high or the highest swing high formed after 10 a.m. is this swing high. So before going down after 11 a.m., this lunch macro will come back and take out all this liquidity formed after 10 a.m. and then it will go down. So that was the reason. So that is the reason I was continuously anticipating for the price to come back and take out the swing high. But we'll see what we'll get. So we are rejecting again from this new day opening gap. So I might have to reverse my trade again. So I have to reverse my trade, guys. So we had a rejection again from this. So we have a rejection again from this. So now on a 1 minute chart, we have this bearish order block, this series of up close candles, and we closed below this swing low, below this opening. So we have this breaker, this down close candles, and this series of up close candles, and then we have this expansion. Now I'll be looking into this PM session liquidity. So this would be my target. Now we closed on a 15-minute chart, we closed below this midpoint of this wick. So which gives us the confirmation that now we should be looking for bearish prices. Now price should remain below this breaker. So we have this bearish fair value gap coupled with this volume imbalance on a 1 minute chart. We want to see price remain below this bearish fair value gap coupled with this breaker. So this is yesterday's PM session low, guys. This is our sell side liquidity. This would be our target. But we need to see expansion, guys, now. We need to see strong big candles now. Because we have already done the manipulation. We want to see expansion now. The manipulation is done. So we want to see big candles now. We'll take some partials at this swing low, guys. Sell is buy, right? Buy. So I'll take my first partial here. Consolidation killed us, guys. So we have this 1 minute volume balance here. We want price to remain heavy below this balanced price range. On a 5 minute chart, we have volume balance. So the max price can go is up to this volume balance, but it needs to remain below this balanced price range, guys. It needs to remain below this. Manipulation, this entire manipulation part is over. We need to see big candles now. So this is the 5 minute volume balance. The utmost price can go is up to this volume balance. And we want to see a rejection from this volume balance. We have another liquidity here, this wickless candle. So a candle without wick is nothing but liquidity. It, it could be either a low or a high without wick that will act as liquidity. So on a 5 minute chart now we are inside this volume balance. Inside this volume balance, I will highlight this volume balance. I'll change the color to red. So price went into this 5 minute volume balance and we are rejecting. We need big candles, guys, now because the manipulation part is done. We need to see big candles now. So this is my first partial, guys. This is my first partial, and I will take one more partial here. Confirm. So we have this bearish fair value gap here. So the utmost price can go is up to this bearish fair value gap, take out this liquidity, and then it has to come back. The worst case price can go is up to this bearish fair value gap on a 5-minute chart. Now we are inside this 1-minute bearish fair value gap. We took out this liquidity, and I want to see a rejection, a strong rejection from here. We created this equal lows, so, and we have this 5-minute bearish fair value gap. So price might go and take out the swing high, which is coupled with this 5-minute bearish fair value gap, and we should see a rejection from there. So we took out the swing. So we took out the swing high, guys, and we went into this 5-minute bearish fair value gap. We need to see a strong rejection from here. So we want price to close below this balanced price range. So we took out the swing high. So we are seeing a rejection, which is a good sign. Now we want the same momentum to continue down. So we are approaching our first partial. We were just shy away with few ticks before taking our first partial. So my first partial is taken. Now we are moving towards my second partial. Second partial. So again we have this breaker, guys. This series of down close candles, and then this manipulation, and then this expansion. So these two down close candles are our breaker. So price should remain below these two down close candles. It should not go beyond these two down close candles. So this is our breaker, guys. So price should remain below this zone. Should not cross this zone, because this manipulation part is already done. So we want price to remain heavy below this breaker, and this is my second partial. So we took our second partial. So now I'll be adjusting my stop loss. Okay. So we have this bearish fair value gap coupled with this breaker. So the maximum price can come is up to this midpoint of this breaker, and we want to see a rejection from here in case if it comes up to here. This is yesterday's afternoon's first presentation fair value gap after 1:30 p.m. So if price closes below this, we want to see some kind of expansion. So we already have taken two partials till now, and we want to see price remain heavy from this zone. I think these zones are not relevant anymore since we already rejected from there. So the recent relevant zone is this breaker. So we have a volume imbalance here. So at most the price can come is up to this volume balance, and we want to see a rejection. So now we are already inside this 1 minute bearish fair value gap. So on a 5-minute candle, we have 30 more seconds for this 5-minute candle closure. So far this candle is looking good. So we want this candle to close below this swing low and this low of this previous candle, so that this will become a bearish order block. Oh, I wanted this candle to close below this swing low, but again we are going up. Okay. So the most it can go is up to this volume balance. I did not like this closure on the 5-minute chart. I wanted this candle to close below this swing low with the body, but this is not looking good. Okay, on a 15-minute chart we have this volume balance again. 15-minute chart we have this volume balance. So we want price to remain heavy below this volume balance. Okay, there is one more volume balance here. Maybe put it. So I'm adjusting my stop loss to the midpoint of this bearish order block. Midpoint. We had a huge rejection from this VIX. If price does not close below this 15-minute volume balance, I might have to rethink my trade. But I don't think price is going beyond this consolidation, because we already have done so much back and forth here. So this is completely balanced both on the buy side and sell side. So price should not cross this midpoint of this consolidation. On a 1-minute chart, we have one more volume balance here. But these series of swing highs are looking very suspicious. Like we have tons and tons of liquidity here. If I just draw a trend line from here to here, you can see tons of liquidity is being built up here. But I don't know whether we will take out this liquidity in this session or it will remain intact. We have to see. We want to close again below this breaker, guys. We want to close below this breaker candles. So still we don't have closure below this breaker with the body. So we are still inside this breaker. So we want a closure below this breaker with the body, guys. We want a closure with the body, not wick. We don't want wicks. We want bodies. So we are still consolidating inside this breaker. So we want to move away from this breaker. So we need candles to close with the bodies. So I'm moving my stop loss to the break even, guys, because we are in the lunch time. So price can just move back and forth and just hit our stop loss. So I'm putting my stop loss at the break even. If my stop loss gets hit, then I'll be looking for trades after 1:30 p.m. post lunch. You can see on a 5-minute chart, price is still struggling to close below this wick, guys. This down close wick is there, right? Price is still struggling to close below that wick. We need a closure with the body. We don't want to see this wicks. It looks like my stop loss is going to get taken out. Yes, my stop loss is taken out, but I closed it at break even. So I'll try to go long from here. The stop loss will be below this thing. No? The reason I went long is price on a 5 minute chart. You can clear see price failed to close below this wick, guys. So now we have a closure above this swing high, above this swing high. So indicating we have market shift on a lower time frame. So we have a market shift and we have a closure of this candle above the swing high with the body. So we have a market shift on lower time frame. So if the lunch macro is still in play, then we can still target this 10, this swing high. Since we closed above this swing high, we want to see some expansion from here. We already have taken swing lows multiple times. The sell side liquidity we have taken multiple times. If this is lunch macro, then our target would be this swing high, guys. This is the first swing high, highest swing high created after 10 a.m. So if this is the lunch macro in play, then we could target this swing high. So again, we have a rejection from this 5 minute bearish fair value gap. Price never closed above this 5 minute bearish fair value gap with the body. So we are having a rejection from this. If price remains bearish, then so I just reversed my trade, guys. So we had a rejection from this 5-minute bearish fair value gap and price never closed above this. So now we have closed below this up close candle. So we want this 5-minute candle to close below, at least below 50% of this wick. So this would be my stop loss, above 50% of this bearish order block. And my target would be the same thing. Right from the morning I've been telling, this is our target, guys, this is our liquidity. So we want this 5-minute candle to close at least below 50% of the swing low. This wick, at least below 50% of this wick. We have 20 more seconds for this closure of this 5-minute candle. So we have a volume imbalance on a 15-second chart, and we have this breaker, this down close candle, and then this manipulation, and then this expansion. So we want price to remain below this volume imbalance and then this breaker. So we have a volume imbalance on 1-minute chart in case if price wants to come up to here. So we created equal lows here. We created equal lows. If price closes above this bearish candle, then I will reverse my trade. Then I'll be looking for the swing high, guys. But I want this candle to remain heavy below 50% of this bearish order block. So we want rejection. So we want this candle to remain heavy. So we have our rejection from this bearish fair value gap and this breaker. We don't want to see these wicks, guys. We want this follow through. We need this candle to close below the swing low. We need this candle to close below the swing low with the body. With the body. Still, we have 1 more minute for this 5 minute candle to close. I want this candle to close below the swing low with the body, guys. I don't want this to create a wick. I'm tired of this wicks. So we are inside yesterday afternoon's first presentation fair value gap. So we want this candle to close below this first presentation fair value gap so that this will act as inversion. And from here we can target our yesterday's PM session low. So far we had a good closure of this 5 minute candle below this swing low with the body, and we have this balanced price range from wick to wick and this bearish order block which already took the liquidity. So now price should remain below this sorry, from here to here, guys. You can see price is balanced. This wick which offered both buy side and sell side, this wick offered both buy side and sell side. So from here to here price is completely balanced. So price should never go above 50% of this balanced price range, and it should remain heavy below 50% of this range. But this 15-minute candle still did not give a closure below this wicks. So I want this 15-minute candle to close below this wicks. Since this is a new 5-minute candle, I want to see this power of 3. So this could be the manipulation and then expansion. Accumulation, manipulation and expansion. This is the accumulation and this is the manipulation part, and I want to see the expansion to the downside. So we want price to remain heavy. It should never go beyond this 50% of this balanced price range, this wick to wick. And we have a wick onto the left side also, which 50% of which is coinciding with this. So it should remain heavy below this. So this is what we are looking for, this, guys. We want this candle to remain heavy. It should never cross 50% of this range. We want this 5-minute candle to remain below 50% of this range. The wicks can go above this midpoint, but bodies should never go above this midpoint because this is the balanced price range. The wicks can go above this, but finally, ultimately, it has to close below this midpoint. But this 15-minute candle, it is not looking good. This price action is so frustrating, guys. It's very hard to trade this. Very, very hard. So we have our rejection from this balanced price range. We want this candle to remain heavy. It should never go above this 50% like we discussed before. It's again going back up. If it is closing above this 50% of this range, then I will better kill my trade and wait after 1:30 p.m. to trade. Because this consolidation is literally killing me. Oh, I can't even close my trade. So I close my trade. So I want to, so now price took out this swing high. Price took out this swing high. Now we have to see whether it will reverse or it will move forward. So in consolidation, it is very hard, guys. The technicals don't work, so it is very difficult to trade in the consolidation. See the kind of price action, guys. Completely back and forth price action. And we have this entire trend line liquidity created on the buy side. I don't know when this will be purged, whether today or tomorrow's red folder news, tomorrow, Wednesday. Yeah. That's it for today, guys. I think there is nothing much to trade. You can see on a 15-minute chart, there is nothing going on here. Complete back and forth price action. So there is nothing technical to trade here. So better. So that's it, guys. I'm going to stop this session. Maybe I'll stream tomorrow in the afternoon session because we have this FOMC tomorrow and federal funds rate. I think in tomorrow morning session we might not see that much volatility. It will be consolidating and building liquidity for this red folder news. So we might see some good volatility injection in the afternoon session. So I'll try to stream in the afternoon session, guys. So that's it for today. Thank you.